Howdy, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Thursday, September 11th, 2025. Before we get into everything, I just want to take a quick, brief moment of silence today for all the victims and the families of the victims of our September 11th tragedy here. I'm staring out the window at One World Trade and the Statue of Liberty, and obviously a lot going on in our country. So my heart's heavy this morning. So if you don't mind joining me for a brief moment of silence, that would be wonderful. Amen. So before we get into everything, I just want to make one brief comment about everything that's going on. Um, I would say 100% of the people I know are of the view that the world around them is getting worse, not better. And my response to all of their complaints is the same. And I want to share that with you guys this morning. And that is to say that if you don't like it, go fix it. It's up to us to treat people with kindness, with respect, with dignity. It's up to us to change the world around us in our homes. It's up to us to change the world around us in our workplaces. It's up to us to change our communities. And ultimately, if we do enough of that on the micro level, we'll see enough of that reflected on the macro level. So I just want to say I love you. God bless you guys. Appreciate you guys tuning into these every single day. So without further delay, let me get into the executive summary from today's lead-off morning note. If you would like to review the analysis supporting these conclusions and to see if you need to make any changes in your portfolio to remain on the right side of market risk or to get on the right side of market risk to the extent you haven't been following KISS or Dr. Mo, you need to be a client of 42 Macro. So today's key macro question is, why aren't bears getting paid despite fresh evidence of sticky inflation and an unraveling labor market in the U.S. economy? Our answer, in a word, paradigm C. Sorry, that's two words, but you get the point. For our fundamental research summary, the Trump administration is likely guiding the U.S. economy to paradigm C, which features all the fiscal and monetary largesse that perpetuated the K-shaped economy of paradigm A, plus trillions more in tax cuts, substantial deregulation, and some reshoring of industries deemed critical for national defense. In short, paradigm C implies the net impact of fiscal, regulatory, and trade policy changes represents a durable positive shock to growth that Wall Street consensus is currently underpositioned for. Our fundamental research summary also reads the path that asset markets may take to realize paradigm C's upside risk is not linear. The worst of the U-shaped economy is likely still ahead of us, and the slowdown in growth will flatter consensus recession fears. Trade policy uncertainty is likely to persist as well and may even deteriorate. We view these transitory outcomes as scarecrows to be faded by every investor with an investment horizon that extends past this fall, because the administration's policy signaling continues to imply a low probability of a return to bearish paradigm B. Focus on the forest, not the trees. Since April, we have anchored upon our paradigm C theme to instill confidence among thousands of professional and retail investors around the world, helping them block out the bear porn noise and maximize upside capture in this raging bull market. The bullish market response to today's unequivocally bearish data gives us confidence to reiterate our theme, which we still anticipate is likely to persist through at least November of 2026 when the US midterm elections occur. As we wrote yesterday, if we're going to be proven wrong on our paradigm C theme, or if it's about to take a hazardous intermission, the investors on Team 42 can continue to outperform stress-free because they know from experience that the institutional grade risk management overlays featured in KISS and Dr. Mo are as effective at minimizing downside capture as they are at maximizing upside capture. As someone who uses KISS to manage my entire liquid net worth, I also find our risk management track record comforting. You can count on one hand the number of Wall Street strategists who navigated their clients' portfolios to safety ahead of the 2022 and 2025 crashes, while also helping them maximize upside capture in 2021, 2023 to 2024, and 2025 bull markets. Our team at 42 Macros worked tirelessly to earn that distinction, and we will continue working tirelessly to earn and re-earn your trust on your journey or your clients' journeys to an on-time and comfortable retirement. Thank you. Transitioning to our 42 Macro dashboard, as always, we'll wrap up with a question from our community. This one's a comment about the fourth turning. It says, hi, DD, did you see that poll from Rasmussen? Glenn Beck just posted the results on X. It proves the fourth turning is upon us. So the answer is yes. For those who may be unfamiliar, Rasmussen just published the results to a survey that indicated, among other things, 76% of young voters agree that major industries like healthcare, energy, and big tech should be nationalized to give more control and equity to the people. 53% would like to see a Democratic socialist candidate win the presidential election. And that includes over a third of those who said they voted for Trump in President Trump in 2024. Among those who said they wanted a Democratic socialist president, 31% said the main reason for their support was because housing costs are too high. And then I can go on and read this, but I thought this was really important to date is that 59% of these young voters support a proposal for a new constitutional amendment that would give the United Nations the authority to oversee the Supreme Court, the presidency, to ensure that Americans' rights are being protected. This is some forth-turning stuff, folks. If you go back to our last several macro scouting reports, the key conclusion slide of our left tail risk section in those macro scouting reports, those monthly macro scouting reports, was the likelihood, the high likelihood, in our opinion, our data-driven view, that Paradigm C will ultimately fail. And so the goal of Paradigm C, to recall, is for the fiscal authority to try to pull the levers it's likely it can pull, and some others that it's trying to pull that it technically doesn't have any right to pull, at least according to the current statute, in order to outgrow the growth of the debt and to stabilize the debt to GDP ratios, to stabilize the debt and ultimately outgrow it. And so it's our view that they're going to continue to frantically pull every lever and twist every knob in their purview to engineer this outcome. It's also our view that they will ultimately fail, because when you study the history of these major Republican tax cuts, going back to the two tax cuts under President Reagan, the two under President Bush, and obviously the Tax Cuts and Jobs Act under Trump's first administration, what we find from our analysis is that only one of those tax cut programs created a durable positive shock to growth on a long-term basis. 4 of the 5 created a durable positive shock to the budget deficit on a long-term basis, and all 5 created a durable positive shock to the debt to GDP ratio on a long-term basis. And so it's very unlikely that we outgrow our way out of a 6% debt to GDP, deficit to GDP ratio year after year after year. And so ultimately, we're going to wind up with a situation with even more debt and even bigger deficits. Not anytime soon, but this is the likelihood over a multi-year time horizon, which ultimately means that the biggest risk to the Treasury bond market, which has always been at the epicenter of our invested during a forward-turning regime analysis, the biggest risk to the geopolitically driven supply-demand imbalance in the Treasury bond market is Paradigm C's ultimate failure. And what that likely means from a socialist perspective in terms of further lurching into the populism and fiscal dominance. And ultimately that will require a shift to Paradigm D, which is whatever that administration's, will be their desire to try to print their way out of it, much like we saw in ancient Rome, much like we saw in the 1500s in Europe, much like what we saw in the 1700s in France, much like what we saw in the 20th century in Weimar Germany, much like what we saw in the 20th and 21st century in Argentina, Venezuela, Turkey, you name it. We've seen this movie play out many times before in human history. And hopefully our investing during a forward-turning regime analysis has proven to be a durable and lucrative roadmap for you, just as it has proven to be a durable and lucrative roadmap for our thousands of clients around the world who are maximizing upside capture to the 100th percentile